Today, we're going to break down the single biggest threat to your trading capital. It's called the overconfidence bias. So let me ask you a question, point blank. As a serious operator in these markets, what do you think is your single biggest liability? Most people, their first thought is, oh, it's my strategy. But here's the thing, it's not. A bad strategy, that's fixable. Okay, so if it's not the strategy, then it's got to be the market, right? The unpredictable, rigged market? Nope. The market is just the market. It's totally neutral. So that's not your biggest problem either. The real liability, the one that does the most damage day in and day out, it's right between your ears. It's your own mind. And we're going to talk about one specific, incredibly destructive bias. So let's peel back the layers on this unseen enemy. See, overconfidence isn't just about feeling good about a trade. It's a real, measurable, statistical flaw in how we make decisions. And when you're dealing with capital, it's absolutely lethal. And this number right here, it says it all. There was a study of professional fund managers, we're talking the pros, and a whopping 74% of them rated themselves as above average. Just let that sink in for a second. That's literally impossible, right? By definition, most people have to be the average. This is pure EO, just steamrolling over basic logic. So let's be crystal clear on what we're talking about. Overconfidence bias is, plain and simple, a totally false assessment of your own skills. It's your ego tricking you into believing you're better than your results actually prove you are. Okay, but this isn't some fuzzy, abstract idea from a psychology textbook. No way. This bias has 4 specific faces, and I guarantee they're showing up in your trading operations right now, quietly killing your returns. Let's walk through them. First up, you've got overranking. That's when you think you're crushing it, but your actual P&L tells a very different story. Then there's the illusion of control. This is a big one, where you start to believe you can actually control or predict completely random market events. Third is timing optimism. You get into a trade and think, oh, this will work out in a few days, when in reality, it could take weeks or months. And last, the desirability effect. This is just pure wishful thinking. You want a trade to work out so badly that you convince yourself it's more likely to succeed. Every single one of these is a landmine for your account. And these landmines, they have a real cost, a very, very high cost. I'll say it flat out. Your ego is the most expensive liability you have as a trader. Let's look at exactly how it burns through your capital. When you run in on overconfidence, what happens? You start trading way too much, just churning your account and feeding your broker. You stop diversifying because you're so sure about a few can't-miss ideas. You completely misjudge the actual risk you're taking on. And maybe the most dangerous part? You start ignoring any piece of information that goes against what you believe, digging in your heels while a position goes against you. Now, contrast that with this quote. This is the mindset of an elite operator. They know that no matter how good an idea seems, no matter how confident they feel, they could still be flat out wrong. Their entire process is built on that one single premise. That's not weakness. That's how you protect capital and stay in the game. So what's the solution? How do you fight this? Well, you don't fight it with more discipline or willpower. That's a losing battle. You fight it with a system. The antidote to emotional, ego-driven trading is a rock-solid, structured process. And that's exactly what STOA, the Structured Trading Operating Architecture, is all about. Our entire protocol is engineered to dismantle this bias. Step 1, you systematize everything. Your entries, your exits, your sizing, they're all based on objective rules, not gut feelings. That takes the emotion out of it. Step 2, you completely flip your focus. You stop chasing returns and start obsessing over risk management. You plan for the worst-case scenario first. Step 3, you document everything in a decision journal. This forces you to be honest with yourself and see where your thinking goes wrong. And finally, step 4, you build in a system for self-awareness, where you are constantly methodically questioning your own beliefs. This is how you achieve true operational clarity. Because at the end of the day, it all boils down to one simple truth. You don't get paid for being right in the market. You get paid for managing risk. The moment you truly, deeply internalize that idea, everything about your trading will change. If you've made it this far, you're not just curious, you're serious. And that's exactly who STOA was built for. Here's the deal. We don't accept everyone. We run on an application-only system because we only work with people who are ready to operate at the next level. So if you want to stop wasting hours chasing noise and instead run a proven, documented process that gets results in less than 90 minutes a day, apply now.
There are limited seats, and once they're filled, they're gone for the quarter. Click the link in the description, fill out the short application, and let's see if you're a fit. If you're watching this, my guess is you already know you should.